Started. And while that's happening, I'll just give our normal disclosures and reminders. Remember that this Q&A is just for general legal information. It is not legal advice. If you need legal advice or you have a question that requires a response that is legal advice, please talk to your association counsel and we'll let you know if a question is too specific for our purposes today. I trust that you all know how to use Zoom at this point, but if you don't send a message to us and we can try and help out, but keep yourselves muted if you possibly can. It helps keep down background noise and allows us to get through all the questions that we have. And if you have a question, feel free to pop it into the chat. We are light on questions today, so we may have time if you have something burning. Put it into the chat. You can send it to the whole group or you can send it to Chelsea directly if you prefer. We are getting a lot of questions about the CTA still, but we don't have any today for the Q&A. But just know that as of right now, enforcement is temporarily blocked. There's lots of litigation going on. We've talked about ad nauseum, I think, over the past couple months. Our recommendation is that you do report at this point. It's the lowest risk option, but that's a pretty small risk of if you don't comply at this point because things are blocked. But watch this space, as they say. I'm sure we'll have more information as things change. A reminder, I think Valerie has been reminding you if you want to get information from the Legislative Action Committee of Washington CAI to subscribe to the Monday Morning Minute. That is a little newsletter that comes into your email every Monday morning, excuse me. And if you haven't resubscribed for this year, it's an annual thing, so you need to do that to make sure you get those updates. I think that's it. Ken, unless you have anything else to add, I'll just jump right in.
Well, I would offer that there is a very active little group of homeowner association advocates trying to get amendments done to both Ukiah and to other community statutes. There is a not quite as zealous group of attorneys trying to also get some modifications done. And then we've got the Legislative Action Committee, which Valerie is on, not so much trying to promote changes, but to just help the legislature understand what these other two groups are trying to do and how that might affect the other 8,000 or 10,000 communities in the association or in the state. There's also a group of, or one of the groups of attorneys is clearly backed by developers, and they are trying very hard to exempt homeowner associations of plat communities with fewer than 50 homes from much of the law. So it'll be sort of interesting to see what the legislature does with this. I'm surprised at just how much work these, the little group and the attorneys are putting into trying to detail with even more pages of legislation how you have to respond for your communities. So that's all I got, Lisa.
All right. First question. Is the ACC required to keep minutes of its meetings? This is the architectural committee of your association. The ACC chair thinks he or she alone can make decisions, so never calls meetings of the members of the ACC and never generates meetings since no ACC meetings are ever held. I think he never generates minutes of meetings, excuse me. What can we do? Is the ACC required to keep minutes? The short answer is yes. An association under 6490-495 subsection 1, an association must retain the following: minutes of all meetings of its unit owners and board other than executive sessions, a record of all actions taken by the unit owners or board without a meeting, and a record of all actions taken by a committee in place of the board on behalf of the association. So it sounds like that is particularly on point to this question. If there is an ACC committee, it should be having meetings and it should be minutes of those meetings should be kept. As for what to do, the board can remove this person from the committee. If they're not complying with statutes and not complying with your governing documents in performance of their duties, it creates a risk for the association if this person is not handling that committee properly and is not holding meetings and keeping minutes. It also creates risk for that person. Courts have generally held that there is immunity for board members and indemnification for board members on behalf of their community, but that can be lost if a board member acts improperly. So definitely, if they're not using their business judgment, if they're not acting in the furtherance of the benefit of the community, there's a chance that immunity for that board member and for that individual or that board could be lost. So, that's definitely something to keep in mind. Definitely talk to your association counsel if you have questions about what to do. Certainly, it's unclear from this question if the ACC chair is a board member also, or an appointed member of the community. That might be something, if they're a board member and they're not complying with their board member duties, that may be an issue for the community to address in a form of a recall or removal. But that's a different question, I think. Anything you want to add, Ken, that I missed there?
Yeah, so someone is going to make an argument that Ukiah 6490 doesn't apply. So I'll offer that the Homeowner Association Act and the Condominium Act have the same record keeping requirements and require that committees keep minutes. So I might also offer that you can certainly try and reason with the ACC chair and ask them to comply before the board takes some kind of power away from them. And, I'd like to think that most volunteers are trying to do the right thing, and they may be disregarding this because they don't see value to it. But I can also assure you that having a proper record of the meetings is what would allow a decision of the ACC, good or bad, to withstand a court challenge, and that making decisions independently is not allowed under the statutes. If it's a committee decision, the committee needs to meet and have a quorum, and not documenting the meetings does present risk to the association. Second question. So this question keeps coming up in various associations. I'm hoping you can give a definitive answer. If someone reports a rules violation on another owner's property, does the association have to disclose the identity of the reporting party or the person who's complaining if the violating homeowner asks for the information? So we cannot give you a definitive answer without knowing a lot more very specific facts about the kind of violation, the people who are making the requests. But the short answer is that probably, yes, you'd be required to disclose the name of the person who's complaining. I could find exceptions to that if the violation is obvious enough that it can be confirmed by a manager or a board member without having to rely exclusively on one person who's complaining. Normally, I would say that the owner who's complaining is not being reasonable to expect that they can remain anonymous. If you are wanting the board to enforce a violation, then you should be willing to let yourself be identified. I mean, there's also sort of a basic premise under the US law that a person should be allowed to confront their accuser. And so if there was a violation, then one could extend that to say, well, the person who is in violation should get to know who was complained about it. I'd also offer that in most cases, you can't hide the identity of the person who's reporting the violation anyway, because the person is going to know it's their next door neighbor or it's their downstairs neighbor complaining about the noise or the hardwood floor. You can pretend that the person is going to remain anonymous, but in a practice, that's going to be a really difficult thing to do. So I'll say a more technical kind of analysis of this would be to try and look at the records statutes in all of the community association statutes in terms of what records are required to be provided to an owner. And so a complaint is clearly a record. And so I'd want to be looking at, well, is there an exception under the list of exceptions in the statute that would allow for the board to withhold the name of the complaining owner? So the applicable statute under Ukiah is 6499, or excuse me, 495, subsection 3. And it's got a long list of those things which the information is supposed to be redacted from. Now, redacting information is different from withholding a form. So what this would imply is that if we can find that an exception applies, you could remove the name of the complaining owner, but you'd have to give the rest of the complaint to the owner who is in violation. And just the facts of the complaint may help them know who has made the complaint. There's one specific exception, which is H, that says that you redact the individual unit files other than those of the requesting unit owner. Now, and then we get into a challenge of knowing whether the complaint is filed with the unit that made the complaint or filed with the unit that's in violation. Because if the complaint's filed with the unit that's in violation, the requesting owner is the one who's asking for the information, and that would not give you the ability to redact the name of the person complaining. And so it starts to get really convoluted and complex depending on what the issue is. But I do normally advise that if an owner is expecting the association to step up and enforce something in the declaration, they should be prepared to have themselves identified. And if you, as a board, are concerned about the backlash which is going to occur, then before you start enforcing, make sure you talk with the person who's complaining to make sure that they are comfortable with the fact that their name is likely to come out as having reported the violation. And let them guide the board on whether or not the enforcement should be pursued. Anything you want to add on that, Lisa?
No, I think you touched on the only thing I was going to add is that if something like that comes up and a homeowner is not willing to have their name be attached, it's possible that the board member or another unit owner may be able to witness whatever the issue is and can sort of circumvent that concern, I suppose. And they can
Well,
be the
then they
complaining
get to
party.
take the brunt of the backlash.
Exactly. They're already the bad guy, right? But that's it. All right. Next question. Are there any reasons that you would discourage an HOA from renting the HOA clubhouse to a homeowner for the purpose of the homeowner conducting a paid workshop? Would it matter if the homeowner is a business owner? I don't think it matters if the homeowner is a business owner necessarily. The board gets to exercise its business judgment on things like this. The board should make an informed decision, which means they need to know whether what their insurance covers, what their insurance policy says about things like this, how many people are coming, what risks there may be, what the venue is like and what needs to accommodate for the people, what kind of activities are going to be there, is alcohol being served, those kinds of things. There certainly could be a benefit to the association in terms of economics. I mean, if there's rent coming in, it could be a good benefit for the association. So that's something they should definitely consider. There may be on the con side that may make the clubhouse not available to other homeowners. So that may be something they want to consider. But I think you've definitely want to talk to your insurance agent. I mean, there are a lot of associations out there that do this regularly. Their clubhouse is routinely rented out, and that is part of their budget, that there is a rental income. But that's definitely something the board needs to go into with eyes wide open, weigh the benefits and risks of what is being asked of them. And also, what's the history been? Have you already been renting out the clubhouse for other things? And it would be seen as sort of unequal treatment to deny rental to another party. So I think you want to kind of take the whole thing as it is, and each community is very different. So you really just need to look at what the needs of the community are, what the benefits and what the risks are, and see whether it fits for you. Anything to add to that, Ken?
Yeah, I just repeat that I think your insurance agent is a valuable source of information. You would want to be able to tell the insurance agent what kind of activities are going on. I would probably suggest that activities that start relating to childcare have a higher risk than activities that might just be, I don't know, a knitting workshop or something like that for adults only. So you need more detail, and we can't answer a legal question on this in our forum here. But I think that the risks are what you're trying to evaluate most against the economic benefit that you're going to get, and then balancing it against taking away whatever use of that space might be for the other owners, which may be inconsequential in a lot of cases. So next question is, you've mentioned in the past that you do not like to see decisions made by alternate board members. Would you please explain why it's a bad idea for alternate board members to vote when the primary board member is absent? If the bylaws require electing alternates each year, do you recommend amending the bylaws to not have alternates at all, or just not give them the power to vote? So I feel like I've answered this question multiple times. I don't like alternates because I think that the intent of having a board of directors is that you are selecting specific individuals to make decisions on behalf of the community. And if you start putting alternates in, you have different people making those decisions. Yes, I would recommend that you remove alternates from your governing documents if they are there. But this is, not my decision on whether or not you have alternates in your bylaws or your governing documents. It is a community decision. And if you want to have them, my advice can be disregarded with regard to alternates. Basically, you do what you want until it starts causing problems. I'm sure there are communities that have had alternates and it's worked just fine for decades. And so I don't need to mess with it if you don't have a problem. But, sort of in a technical sense, if you've elected 5 board members and 5 alternates, that gives you 10 different people with the potential for making decisions. And if an alternate only shows up once every 6 months because the primary person they're an alternate for is there the other 5 months out of the previous 6, the alternate is not going to have the same information to make an informed decision. So, anything you want to add on that, Lisa?
No, I'm just thinking, or I am just thinking of other associations thinking, wow, to have that many people want to be on the board must be a real benefit. But some places are just begging for board members. But anyway, next question. As a result of the fires, floods, and higher risk associated with common interest communities, some insurers likely are going to be getting out of business of insuring them, the communities, and multifamily residences. What options might be available in the future? Is there legislative interest for expanding subscriber-funded statewide insurance programs that could compete with private insurance options? We're discussing this before. We'd first like to say that the insurance market has been changing, and policy premiums, et cetera, deductibles have been rising dramatically over the past few years. And so I think it's not necessarily as a result of the recent fires, but water leak damage and other things that have been going on for the past few years have really increased. Some associations have doubled their premiums as well as their deductible requirements. So this is becoming a common thread with communities and not just related to the recent news, the recent sad news. We aren't aware of any programs in our state. There are probably There are definitely things going down in California right now because of the fires near Los Angeles. And I think this is really a question that you would want to pose to your legislature to find out whether or not what's on the horizon. That may be something you could talk to the Legislative Action Committee about if you're really interested, but certainly talking to your legislators and legislature and seeing what is on the horizon there. It's not really something we as a legal team have a pulse on, but I think there definitely are probably changes afoot. Costs are definitely going up just across the board for all communities and all homeowners, frankly. Anything to add to that, Ken?
Well, insurance, property insurance is a way of trying to spread the risk of you having a large loss amongst a large group of people who don't have large losses. And the premiums that are paid have to, on average, cover the costs of all the damages which are being insured. And so what happens is that as the actual costs of damage go up, the premiums go up. And it's happened in Washington state, mostly related to water damage. So we've seen higher premiums and higher deductibles because of pipes leaking or roof leaks or, people overflowing their bathtubs. That's been the problem in Washington state. In California, it's been fires because the actual losses for the fire damaged property has exceeded the amount of the premiums which the insurance companies have collected. So California tried capping the rates on insurance to help their residents. And instead, what happened is insurance companies just said, well, if we cannot charge a premium that covers our actual costs for the damages that occur, we just won't sell insurance in the state of California. And California started a program which is the, insurance of last resort, where the state of California picks up the excess cost where the insurance premiums would not do it. And so they've been talking about how California has been trying to balance the rates they would allow insurance companies to pay in order to bring back insurance companies instead of the state being responsible for all those losses. I don't know that our state is going to be willing to let the public pick up the losses by capping insurance premiums in the state of Washington, especially for water damage. So it is something which the the insurance is necessary for anyone who's got a mortgage because their bank is going to require that there be protection for the secured asset on their home. So you can't just choose not to buy insurance unless you have no mortgage.
Well, your
And
insurance company or your mortgage will give you forced placed insurance. It's very expensive.
yes, and the insurance that's provided under a forced insurance by the bank only provides coverage for the amount of the loan. It doesn't rebuild your property.
That's right.
So at any rate, I don't think there's a short-term solution to any of it. The long-term solution for you as an individual community is try and look at what you can do to reduce risk for your building. Can you install fire alarms to reduce the risk of fire? Can you install automatic shut-off valves to reduce the risk for water leaks? Can you replace the piping so that you are less likely to have failures? I was talking with a client earlier this month where they have 35-year-old pipes, then they have 2 to 4 pinhole leaks a year that are causing damage. And so they've now got a $25,000 a unit deductible, and their premiums have doubled, and they're looking at actually spending the $6,000 or $8,000 a unit to replace the pipes so that they can reduce their insurance costs. And those are the kinds of decisions that you can start looking at. All right. Next question. If the governing documents are silent on whether owners can keep pets in their home, do we have to amend the documents to limit or prohibit pets? If we do so, can we allow one kind of pets like cats while prohibiting another kind of pet? So the short answer is that if you want to restrict pets, then the best way to do it is to amend your CC&Rs or condo declaration to specifically restrict that use. The more complex answer is that it's going to depend on how your document is currently worded and whether or not a restriction on use that prohibits pets is reasonable for your particular community. The statutes provide for the authority to the community to adopt rules for use of the property. And so I could certainly see an argument that it is reasonable to produce a rule to limit certain kinds of animals in the community. But it's not common, and my recommendation is put it in the declaration because I know it's enforceable in the declaration. And so I'd want to know the circumstances about your community and what kind of pets you were trying to prohibit. Are you trying to prohibit snakes and tarantulas? Are you trying to prohibit birds, fish? I've seen rules that prohibit aquariums above a certain size because of the risk to the community of the water damage if there's a leak. And so it really depends on whether it's reasonable, and reasonable is not something you can measure in a precise way. But the other thing we also want to remind you about is that if you're trying to keep animals out, that pets are different from service animals or emotional support animals, which are protected by the Fair Housing Act. And it's really easy for a person who wants a cat or dog to get a healthcare professional to write a letter claiming that they need the animal as an emotional support animal, and it is no longer a pet. It is a support animal, and you cannot prohibit support animals under rules. You can still have rules that relate to dogs barking, animals crapping in the yard, how the animals are carried or transported between the unit and a person's car. You can have a lot of rules and regulations related to support animals, but you cannot prohibit them. And so this is something that if you've got a specific goal in mind, you might want to talk to an attorney about whether your current document would allow it or whether you should get an amendment because you want your rules to be supported by the majority of your owners. As to something specific like, can you allow cats and not other animals? Yes, we see that routinely in some of our clients where owners are allowed to have up to 2 cats, but not allowed to have dogs, or they're allowed 1 cat, 1 dog, or dogs under 30 pounds. The other thing I would comment on is that most municipalities also do have city or county codes about the number of animals that can be raised in one single family dwelling. And you may find that that is a way that you can enforce the removal of animals without it being in your governing documents. Anything you want to add, Lisa?
No, I think we can move on. The next question is, what is the proper cause of action to take in the event that the annual budget for your community was approved without giving homeowners proper notice and the opportunity to vote? This one is near and dear to me because we're in new budget season and I'm a collections attorney primarily, so I want to make sure your budgets are done right. But so the short answer to this question is, if the ratification process for your budget was flawed, you can do it over. A budget that isn't properly adopted according to the requirements that we talked about a lot under WCIWA, which is 6490-525. And this is for every type of community. This one doesn't matter who you are, what kind of community you live in. This applies to everyone. If the budget does not follow the requirements set out in that section, it's not enforceable. which means that if you hire me to try and collect on an owner who has not paid those assessments, I can't collect that new assessment amount if it's changed, because if it's changed from last year, because the budget was not done properly. The person asking, I'm not clear if they're an owner or a board member, and so I can give kind of brief recommendations or possibilities for both of those. If the board is discovered that they did this wrong, it's pretty simple to re-ratify the budget. You can certainly talk to your attorney about it if you have questions, but basically you just go through the process again, follow the steps outlined in 649525, hold a new ratification meeting after you've sent out the packet, 14 to 50 days. And then any increase in your assessments would start after that ratification meeting had been held. If you're an owner asking this question, you could always ask the board to re-ratify the budget, redo the process. And the reason that we care and what not enforceable means is that I have to validate every debt under the Fair Debt Collection Practices Act, say that this debt has been, I've verified it, I've looked at everything, all the documentation. And so if I can't do that, I can't basically swear that this amount is correct. I am not going to proceed to help you collect that amount. So you, as the board, if you're not referring it to me as a collections attorney, you can probably proceed. It's probably not super high risk to assess the higher assessment amount of the new budget if you didn't do your ratification properly. But you should be aware that there is a risk, and that if an owner becomes aware later or now that the ratification wasn't done procedurally correctly, that they could successfully challenge that increased assessment amount, increased dues amount. So those are things just to kind of keep in mind. It's so much simpler, and it's a fairly simple, straightforward process, and the statute really lays out exactly what you need. So it is always difficult for me to see those budgets come through and say, oh, you're so close. But and I do have a few associations who are re-ratifying, and you don't even have to hold a formal meeting. It can be a fairly quick process, but it should be done correctly if you want to have someone help enforce the new assessment amounts. Ken, anything to add there?
Well, it occurred to me while you were talking that there are some older plat communities, meaning homeowner associations of single-family homes, that have in their CC&Rs provisions that limit the increases that can be imposed and require an actual approval by the membership. And those provisions were rendered void by the statute 6490 Ukiah. And so that makes me think, well, before you start telling me that the owners didn't get proper notice and an opportunity to vote, I want to know whether we're talking about the only binding requirement to vote, which is the ratification process Lisa has just described, or whether you are trying to enforce a provision in your governing documents which has been voided by the legislature. Because the legislature states in the statute that as a matter of public policy, any restriction on the ability of the board to increase the dues is void. And so if you're trying to look at your governing documents and say, look, this says I have to have 60% of the owners approve an increase over 5%. I can tell you as the attorney it's void, but it doesn't change the written words in the document that an owner may be reading. And so it may require some additional explanation. And it certainly, I'd want to know whether you're talking about whether the process in Ukiah was properly followed or whether a void process in your governing documents was ignored. Last question we have in advance is, can an association take surplus funds from the prior year's budget and transfer into the reserves, or must they refund them to owners? So we have a statute, which is 6490-475, which talks about what you do with surplus funds, meaning you collected more money from your owners during the year than you actually spent. And this usually means also in excess of what you put into your reserve account, because often people have this leftover money. They don't transfer money into reserves before the end of the year. And so they've got this surplus. So there's sort of two reasons to deal with this. One is because the statute says you're required to either refund it or credit it to the owners. And the other is for tax purposes. The IRS has come out many years ago with a ruling, which is number 70-604, which says that you have to have a formal vote by your members to transfer that surplus into your reserves so that it will not be counted as taxable income. Now, I usually defer to the tax attorney or tax accountant or CPA to deal with that issue. It doesn't usually come through our office, but it is worth noting that technically the surplus funds are taxable income unless you comply with this IRS ruling 7604. And that's completely separate from how the state is telling you to deal with surplus funds by either refunding it or crediting it. From the state perspective, because we're attorneys in the state, we believe that if the money stays in the association's bank account, that it is being credited to the owners based on the common expense obligation, because it sits either in the reserve account and it is spent the same as any other common expense, or it sits in the operating account and it does the same thing. It is avoiding another further assessment to make a future expense. So you don't have to refund it. There are a few clients that have very specifically in their governing documents an obligation to refund or to do an additional special assessment if the actual budget expenses exceed the budget by a certain amount. So I know I have one client where if the surplus is more than 3%, or the deficit, meaning they spent more than they took in, was more than 3%, then the association is required to make a refund or to do an extra special assessment to bring the bank accounts closer into alignment with their actual expenditures. So you do need to look at your individual documents. And I'd like people to at least be aware of the risk that the IRS could declare that surplus funds were taxable income and talk to your accountant at tax time. And I'd probably recommend, if the IRS says you've got to have a vote of your owners to do this every year, then put it on your annual meeting agenda and do the vote every year, because that's the lowest risk thing to do. Any thoughts on that, Lisa?
Nope, nothing to add. Chelsea, do we have any questions in the chat?
Yes, we have a few. All right, so first one, when an association requires a member meeting for repair damage assessment, what happens if quorum is not met?
So I'll take a first stab at this. If you're trying to comply strictly with the damage and destruction provisions in a condominium declaration, for decades, the attorneys who wrote these put a ultra complex and detailed series of steps that the board was supposed to take. And one of the steps was usually calling a special meeting of the owners in order to vote whether to restore the damage. And the language usually contains a specific outcome if the meeting is not held. And the outcome is usually written as any owner could call the meeting or any mortgagee could call the meeting, because it was under the assumption the damage was so extensive that the bank's secured interest was affected. And it also usually states specifically that if the meeting is not called, it is treated as a unanimous decision to rebuild the property. But you do have to read the specific language in your declaration to answer that question. Anything you want to add, Lisa?
Nope, I'll leave that to you.
All right, so next, what is the process to adjust the property lines of an HOA?
This one's probably you too, Ken.
Well, so I guess it depends what property lines you're talking about. Moving property lines is usually not done by the HOA. It is usually done by the two property owners where the line is dividing them. If you were talking about adding more property to the entire community, that might be something the association would do. So it'd be like adding a phase. And we do have communities that are routinely picking up more lots outside the perimeter of the original. Developers do that routinely, and it just requires recording a new plat map. Sometimes it requires a recorded document for the CC&Rs as well. But it really starts to vary by the specific circumstances. If you're talking about adjusting a lot line between two homes, then it requires a new survey, which would show the new property line. Surveys are done by licensed surveyors in this state. It requires the consent of both of the property owners to do it. It typically is not going to change anything like a percentage ownership interest, because the ownership interest can't change under the statutes without 100% of all owners. So I guess that's what I could offer. If you were changing the boundary between two lots in a condominium, then the statutes allow for the two affected unit owners and the board to approve a change like that instead of requiring the entire community. It's sort of equivalent to reassigning a parking space. You need the affected owners to approve, but it won't change the percentage ownership interest because that can't be affected at the same time. Any thoughts, Lisa?
Nope, I'll leave that one to you as well.
All right, so next, when do you think, when do you all think the best time for an association to restate their governing documents in preparation for 6490?
And I can just start and say that we did talk about this fairly extensively, I want to say, in the fall. So if you want to see a more in-depth conversation on this, you can search our YouTube channel for probably 6490 or Wakaiowa. For Wakaiowa probably would get you there as well. And correct me if I'm wrong, Ken, but I think this kind of just depends on what you're looking for, right? I mean, it's going to be for everyone in January of 2028. But if there are parts of Wakaiowa that may be beneficial to your community or that your community wants to enjoy the benefits of now, that's something that you may want to adopt or consider adoption now. If there are things you want to prepare for and put off, I suppose, you can wait. You don't have to do anything at all. Everyone, regardless of whether you amend your declaration or not, is going to be subject to whatever Wakaiowa looks like in January 2028 as things stand right now. So I think it just kind of depends on what you're looking for, what specific things your community is considering are important.
Yeah,
Anything
so we do remind people you are not required to restate your documents. It's just that your document is going to have different text and some different requirements than the statute is going to require. And you need to understand the statute and follow it. So one option is just go through your documents and make a list of the things you can't do anymore and make a list of the things you must do. There are things which we've got communities that want to do early. Like some communities don't have the amendment procedures in their documents. So adopting Ukiah gives them amendment procedures. Some communities want the super priority lien, which doesn't exist for homeowner associations unless you adopt Ukiah. Some condos want a 6-year statute of limitations, which comes with Ukiah, but does not come with the Condominium Act. So there are some very specific targeted reasons you might want to adopt Ukiah. And I would offer that if you intend to enforce something like that and your current document conflicts with Ukiah, it would be best to amend the document. And if there's a bunch of things to amend, then sure, restate the document. But the decision to actually do a restatement in its entirety is one which is balancing the costs against the irritation of having to read the documents and do it, and what kinds of benefits you might get. And as we've talked before, some communities would benefit from a restatement just so they can take 20 different amendments and get rid of them and have a single document. You know, we had one client that had over 600 pages of declaration and amendments, and without changing a single right or obligation of any owner, they were able to condense that down to under 60 pages. So a 90% reduction, which just made it a whole lot easier for everybody when they sold a unit, when they needed to look at the documents to see what they're doing. You know, we would like documents to be short and simple and easy to read. Unfortunately, because the legislature has imposed very specific language for many of the rights and obligations, I cannot make them as simple as I would like to, because I think I have to use the language that the legislature has used. And that's in part because when the court comes to decide what the obligation is, they're going to read the statute language, not my paraphrasing it. So, anything else you want to add, Lisa?
No, that's good. Any other questions, Chelsea?
Yes. This is related to your question about ACC, or the question about ACC from earlier. Follow-up ACC minutes required. If committee is providing initial review but referring to board of directors for decision, are minutes necessary?
Well, I would say that if there's a written report or recommendation coming to the board, that has to be in the board packet for the board to review. And so it would need to be a record, and it would need to be available to owners if requested. I don't think, unless the ACC meets and a representative shows up in person at the board meeting to give their recommendation to the board members, then it's not going to be something which the board is evaluating, and it's not going to be reflected in the minutes. So the only way around, I guess, a written ACC report would be if the ACC shows up at the board meeting and gives a verbal report.
You ready for another one?
Sure.
Yep.
Okay. This is also related to the ACC question. Can you provide some case info on that? Directors not acting in the best interest of the association.
Well, I think you can use Google to do that. There's a number of cases out of Eastern Washington, usually related to someone wanting to build an addition on their house. Riss v. Angel is one of the first cases which was related to ACCs, and that established the duty of inquiry and the duty of use of objective information. It's one where the board made its decision on a single owner's recommendation. And the courts held that the single owner was biased and just didn't want his next door neighbor to build. And it went up to the state Supreme Court twice. So I might start with Riss v. Angel. But I know there was a case out of Eastern Washington, I think it was, where the height of a garage was litigated rather extensively. And one of the issues that came up was that the board president had stepped in and started making decisions on behalf of the community when he was not a member of the ACC. And one of the court's findings was that he was not elected as a member of the ACC and therefore could not speak for the ACC. But I don't remember any other case names right off the bat.
All right. So next one, if an association that consists of more than 50 units is required by the declaration to have an audit prepared annually, governed under RCW 6434, and the CPA has to withdraw from the audit engagement due to lack of financial records available / necessary to complete the audit, what are the next steps for the association? Would the association be able to conduct a vote to waive the audit requirement, even though the association consists of more than 50 units and is required by the declaration to have an annual audit?
Well, the short answer is that if the statute requires an audit, you're supposed to have an audit. A more complex answer is that there's, no one from the state coming in and checking to see if you've done an audit. It's something which your owners might care about. We have many, many clients that we know are violating the statute by failing to get audits every year. And it's certainly not our preference that they violate the law, especially if they are knowingly violating the law. But it's also something where there may be limited risk because no owner is going to come and demand that they spend more money. It's kind of like the associations that don't get reserve studies. So I would have suggested that they talk with the CPA about why the CPA feels they can't perform an audit. One of the challenges that CPAs do have is they're required to have what they call a point of beginning. There's supposed to be a day where they can look into the past and say, this is exactly how much money the association had. And this is exactly how much it owed to somebody else on that day. That's usually the prior audit, because the prior audit has a single point in time where they have, a CPA has calculated what the association has and owes. And it's certainly true, and we've worked with other clients where there is no point of beginning. And some CPAs will say, well, I just can't do it. It's not possible. And my answer is, well, it is possible. The CPA just has to make an assumption, and they can state in their opinion that they are making an assumption rather than having a clear point of beginning. But that could still allow them to accurately reflect the income and expenses over the course of their audit period. And they just have to qualify their opinion. So that's what it's called, is a qualification. And they should be able to prepare that for the association to get you into compliance. And we've seen, clients where an owner has demanded the audit be made and the CPA is saying we can't do it. And we've been able to work successfully with the CPAs to get something to comply. And that allows them to then start producing the audits each year. I would also offer that people need to recognize that even if your document says a condominium with fewer than 50 units can waive the audit, when Ukiah takes effect, that changes. And it changes to, instead of the number of units, the dollar amounts of the budget being the trigger. And the statute says if the budget is in excess of $50,000 a year, which is pretty small for most condominiums, that you're required to have a CPA audit. You cannot waive it based on the number of units. You can only waive it based on a low dollar value of your entire budget. Anything you want to add, Lisa?
Nope. Any other questions, Chelsea?
One more. Association discovered an unknown bank account that was not included in balance sheet. Do these funds need to be added to the operating account or just added to the balance sheet account?
Well, of course, I don't know what the particular account was for. Certainly, it should appear on the balance sheet. If it was a reserve account, then I'd say you could certainly transfer the funds into any other reserve account the association had. If it was an operating account, I think you could probably transfer the funds into your regular operating account so that you can limit the total number of bank accounts that you have. The particular facts might start to matter, but I certainly, I can tell you, I've got some accounts like of $6 at a credit union floating around where it was the required account to open the credit union's membership. And then I closed the account, which I was using for a CD or something, and didn't close the $6 membership account. If we're talking small dollars, this is inconsequential what you do with it. If you found an extra $100,000, then I would talk with your accountant to have them adjust your balance sheet or, suggest how you deal with it. But, sometimes you just have an unbudgeted income and you just explain what it is. And you explain that it was a bank account that was discovered, and so the money was transferred in. Anything else before we go?
Nope, that's all I have.
All right. Well, thanks everyone for joining us today.
All right.
Thank you.
See you next week.
Everyone.